Hello and welcome to M&A Advisor TV. We're here with Lauren Mulholland. She's founding partner at MiddleGround Capital. Lauren, thanks for coming in today.
Of course, thanks for having me.
Yes, and you had the fortune earlier of talking on our panel at some point during the day here. And for those who have not been able to hear that panel, could you just go through and talk a little bit about the areas in which you specialize and why?
Sure. So as you mentioned, I'm a founding partner of MiddleGround Capital. Many people have not heard of MiddleGround Capital before because we're an emerging manager. Okay. So we just raised our first fund this past summer in August. We closed on $460 million.
Congratulations.
Thank you. It was definitely a very exciting milestone for our team. But what we really specialize in is buying businesses in the lower middle market within the B2B industrial space. And so we're effectively a sector-focused fund, and we also tend to stay focused on the lower middle market. You know, our strategy over the next 10 years has us continuing to invest in that market because we see outsized opportunity there. And so, you know, across industrials, we're really looking for businesses that have a manufacturing model to them. Our strategy is such that I'm part of the investment team, but we also have an in-house operations team, and two of my co-founding partners actually started their career on the operations side working at Toyota. One of them was putting bumpers on Toyota Camrys on the shop floor, and the other one was in the engineering department, and they sort of had full careers there before transitioning into private equity. And so that's a differentiated angle that we have, having really operators in the leadership roles at MiddleGround.
Yeah, I mean, in my years of experience talking with investment bankers and investors as well, I mean, certainly they acknowledge that for the most part they're not practitioners in the area, they're not the operators, they know the finances, but this seems to be something that would quite differentiate you.
Yeah, no, it's been great both with LPs as well as with sellers. I mean, I think we've found that we've competed in a couple of processes where we're up against both strategics and other sponsors, and while our price may fall somewhere in the middle, we've been the prevailing winner because a lot of the families who have owned their businesses for a long time are looking for a variety of outcomes in a sale, and price isn't always necessarily the very top thing on their mind.
Yeah, certainly other factors at play.
Yeah.
Well, and when you talk about industrial companies, you mentioned manufacturing is something that you're interested in generally. Mm-hmm. What kinds of other subsectors would you say would be top of mind, and then also going into 2020?
Yeah, that's a really good question. So, you know, in the industrial sector, there are a lot of end markets that tend to be more cyclical than others, and so some of the things that we're spending less time in today are some of the more traditional sectors that tend to be cyclical. So, building products, construction, transportation, those are examples. Where we're spending more time are areas where there tends to be a little bit less cyclicality to it, but there's still that underlying manufacturing model. So manufacturing businesses that are supplying to end markets such as medical, infrastructure, food and beverage, to name a few. Okay.
And thinking about manufacturing, I mean, so much of the process now is moving to computerized manufacturing. Mm-hmm. And to some degree, I talk to people about robotics and AI even. Yeah. Are those things that you think about when you think about purchasing a company?
Absolutely. I mean, automation is a function of the industry in which we invest. And so a lot of times it's something that we're bringing to the table. You know, there are companies that we've owned that have been 100 years old, you know, so the manufacturing processes that they have are not anywhere close to sort of new technology, but they're still processes that work. Mm-hmm. And so a lot of times we'll improve those processes, and we don't have to take them from a 1950s technology to a 2020 technology, but if we can get them to like a 1970s or 1980s technology by introducing some robotics and other efficiency tools, you know, that's a really good outcome for that company, and it allows them to be more competitive.
Yeah, and I'm sure they would look at you as a partner in that way, a resource really.
Absolutely. That's our operations team is exactly that. They're a resource that the management team has access to that they otherwise would not have access to if we weren't working with the company. And so they come in and they work on specific projects that will help them sort of advance their strategic vision, whether that's operationally or through top-line growth.
And these companies that you work with, I mean, manufacturing is one of the sectors in the news a lot now because of the trade wars. It seems to be among the sectors that people are most interested in reading about. Are you finding that the companies that you work with have issues related to supply management, for example, or is that really not so much of an issue for them?
No, that's definitely something that's very topical in our sector. You know, every time that we're going through our underwriting and diligence process, we're always evaluating what the risk profile is for the commodities that they're using to make their products. And a lot of that has been impacted by the tariffs and the trade wars. And so we're always looking for some level of contractual pass-through or for some type of project-oriented nature to the business where they're able to sort of price a deal with their customers and then get the same price from their suppliers at the same time, such that they're really not impacted by swings in commodity prices. I will say it's interesting because in the manufacturing sector today, we are in a contraction period. And that is an interesting dichotomy with the broader economy that is growing. And so we've seen in a lot of processes, some of the businesses that we're looking at acquiring, not being able to comp positive year over year or to the budget that they put forward.
Okay. Well, and thinking about 2020 then too, with those kinds of dynamics in place, I mean, a lot of people look at manufacturing as a place to move forward and think about, okay, well, is there a recession happening? Because you sometimes see it there earlier.
Yeah.
Yes. So is that something that you're worried about going on to the new year horizon?
It's definitely a concern. I mean, for our existing portfolio, we've really focused on two things. First, putting plans in place for if we see the economy start to sort of turn worse than it already is today from a manufacturing contraction perspective. And then secondarily, we've really focused our resources on growth. So we've done a lot of hiring recently across the board for sales positions, as well as in some cases CEO positions where they can be more commercially minded, both for outreach to new customers, new product development, and also acquisition strategies. So we're really focused on growth, and we're focused on having plans in place to reduce expenses to the extent we need to. But it's interesting because some of the statistics that I've seen recently have indicated that as you have a president who's going into the fourth year of their term and that president is up for re-election, it tends to lead to a lower probability of a recession. So historically speaking, if you look at those statistics, 2020 would not be a year for a recession. But I think you have to question a wild card, which is what is the impact that a lot of these tariffs have had and will have, and will that cause a broader recession that otherwise might not have occurred?
That is the main question, I think, Lauren. Yeah. So we'll have to see how that works out in the coming months here.
Yeah.
Thank you so much for your insights. Appreciate it very much.
Yeah, no, thank you.
Thank you. Thank you for watching M&A Advisor TV.